Hello, today we are solving May 2024 paper Unit 2, question number 2. Gallanna Homes PLC has the following balances at the start of the financial year on 1st April 2023. The share capital amount was 65 million and share premium amount was 13 million. To expand the business, the directors decided to issue additional ordinary shares to existing shareholders. They wanted to raise capital, and whenever you want to raise capital by a PLC, they will issue ordinary. This is one of the methods to raise the capital. They will issue ordinary shares to the shareholders. Okay. During the year ended 31st March 2024, the following took place. So this is a process of issue of ordinary shares that takes place. Okay, they are going to do some application, they are going to do allotment, they will issue first call, second call, third call and final call, and the information regarding how the payments are happening and how much they receive is also given. The first question is 2A. Prepare the following ledger accounts to record the transactions for the financial year ended 31st March 2024. So you are supposed to prepare ordinary share capital account. Okay. So let's see, after issuing the shares, how does the ordinary share capital account change? Okay. Okay, as per the debt cliff concept. So ordinary share capital starts on the credit side. So let's start here on this side. Okay, the balance given is 65,000. This was on the 1st April 2023, right? So let's write here. So the date is 1st April 2023. Ordinary share capital has only ordinary share information, not the premium. Okay, so then this is the first one. Then they are saying that on 7th April 2023 the company offered 12,000 ordinary shares at a price of 1.2 pounds on the following terms. So certain transactions have taken place. We saw that on 1st April, on 3rd May, okay, on 3rd May the applications were received and the directors rejected some applications for, okay, they totally got 13,560, okay, 13.56 million shares had been received. Okay, they wanted only 12 million shares, but they have got 13.56, so they had to reject 1.56 and they allotted only 12 million ordinary shares. So this happened on the 3rd May. Okay, so this is going to happen on the 3rd May, and so it's going to get some money into the, or it will get some money due to the ordinary share capital application. This was due to the application. So let's write, this is going to come from the application and allotment account. Okay, application and allotment. So what is the value? 0.1 times 12,000, 12 million. Okay, so that is equal to, so 0.1 times 12 million. So that is equal to 1,200. Okay, 1,200. This is what they got because that is what they intended to issue. Then they said on 24th of, then on 31st August the balance due were fully received. So on 31st August, due to the allotment process, see, 40 pence was received. Out of that, 20 pence was for premium. On 31st August, this is also going to come from the application and allotment account. Okay, so the amount that's going to come is, so here minus, so I'm going to write it as 0.4p minus 0.2, okay, pounds times the 12 million shares. Okay, this was received on the 31st August due to the allotment process. First it was due to the application process and they received this much of money. Then due to the allotment, okay, after the allotment, they got, okay, they got this much amount of money on 31st August. So zero point 0.2 times 12 million, that is equal to 2,400. Okay, 2,400 they got. Okay, 2.4 million they would have got. We are saying that on November 18th, okay, the first call happened. So first call happened, then the second call happened, and the third and the final call had happened. So this all took place. Okay, let's see. First one is on November 18th. On November 18th, okay, November 18th, first call account, okay, that is equal to, what is the amount you are going to get. So the amount is issued as 30 pence. So I'm going to write in pounds. So as zero point 0.3, okay, 30 pence is 0.3 pounds. So 0.3 times 12 million shares. Okay, so the value they are going to get on the 18th November will be around 3.6 million. Okay, so 3,600. So it will be 3,600. Then the second call, okay, for the second call, how much money they had received, that happened on 31st Jan. So let's write it here. Second call account, okay, what is the worth of money they got? The pence is 25 pence, so 0.25 times 12 million shares. So that value is going to be equal to 3,000. Okay, so 3 million they got. Okay, so 3,000. Then you have the third and the final call, which happened on 15th of March. So let's write it here. So on 15th of March, okay, they got the third and the final call. So this is going to get reflected in the third call. Okay, third and final call. Call account. Okay, what is the amount they would have received in this? So here it is 15 pence, so 0.15 times 12, so that is equal to 1,800. So 1.8 million worth of money they got. So 1,800. Okay, so let's add up the total here. Total will be equal to, so 77 million. Okay, so that is on both the sides you will have to update. And the balance carried down as on 31st March. Okay, they are ending it on 31st March, so you can take it from here. So they are going to end the balance on 31st March, and they are going to reflect the balance carried down on 1st April. So 1st April, the balance brought down. Okay, here also the balance should be the same on both the sides. So I'm going to write it here. The balance brought down would be equal to this value. Okay, balance carried down. Okay, balance carried down, it should be here on the balance brought forward. So this is how you prepare the ordinary share capital account. Then you have the share premium account. So let's prepare this. 1st April, balance brought down was 13 million. Okay, 13,000 here you will write. Okay, because it's in thousands. Now here they issued and they got 0.2 pounds by issuing 12,000 ordinary shares. So this happened on 31st August when they got the final receivement. Okay, here they got the final receipt for the ordinary shares and also for the premium shares. So 31st August they got the other application. It is going to get reflected in the application application and allotment account. Okay, this is going to get reflected in this account. So what is the value that's going to reflect for the share premium? So that is equal to 0.2. Okay, 0.2 times 12 million. 0.2 times the 12 million. So that is equal to 2,400. 2.4 million. Okay. So it is equal to 2,400. And then, so now let's balance out. Okay, what is the share premium account will have at the end of the issue? Okay, at the end of the issue, the amount it's going to hold is 13 plus 2,400, that is equal to 15,400. So 15,400. So the total has to be the same on both the sides. So this will be reflected on the ending 31st March as the balance carried down. So 31st March, the balance carried down will be equal to 15,400. So on 1st April, the balance brought down will be the balance carried down. So that is equal to 5,400. Now the next one is application. The third one is application and allotment account. Let's prepare the allotment application and allotment account. This is a closing account. This is opened and closed as soon as application process is completed. This is not maintained in the books. Okay. So the first one we saw that on 31st August. Okay, the first one we saw that on 3rd May, the bank, through the bank, the application and allotment account received some money. Okay, so let's write it here. They had received in the bank, okay, this much amount of money. So worth 0.1 times 13.56 million. Okay, so that is equal to 1,356,000 worth of share money they had received in the bank. Okay, now out of this, some of it they transferred to the share capital account and the rest was returned. Okay, so some of it was transferred to the share capital account. So ordinary share capital account. Okay, ordinary share capital, this was done on the 3rd May. Okay, they got the money, some they transferred. So what was the amount they transferred to the ordinary share capital? So they had transferred 1.2. The rest they had returned to the shareholders. Okay, so the rest they were rejected. So and they were returned. Okay, so monies were returned on to the unsuccessful applicants on 24th of July. So this was transferred, only this much amount was transferred on 3rd May. And on 24th of July, they gave back the excess money they had in the bank. Okay, so on 24th of July, on 24th of July, they received this, they returned back the excess money. They kept only 1,200. So 1,356 minus 1,200 were, okay, so the remaining was 156 was returned back to the customers. Okay, this was returned back. Then on 31st August, the balance were fully received. So the amount they received here, okay, was equal to, they received 40 pence worth, okay, worth of money at the rate of 40 pence. So they received bank. So 40 pence is 0.4 times 12 million shares was issued. Okay, so that was equal to 4,800. So 4,800 was received. Okay, out of this they had transferred some to the ordinary share capital and some to the share premium. So we saw that we have already recorded. So we have transferred 2,400 to the ordinary share capital and to the share premium 2,400. So this happened on 31st August. 31st August. So they transferred some amount which they had received to the ordinary share capital. The value was 2,400. 2,400. And then on 31st August, they also transferred some amount, okay, which we had already calculated, 0.2 times 12 million. This is also 0.2 times 12 million. So that was transferred to the premium account. Share premium account. So the value was 2,400. So this was transferred. Now let's add up, okay, on both the sides. So this is equal to 356 plus 4,800. So 6,156. Okay. On this side also let's add up here. So this value will be equal to 6,156. So this is a closing account. It's just opened and closed. Okay. Only during the issue and only during the issue of shares it is open, the money is transferred and then closed. Okay, this account is not maintained. Okay, it is closed. Then next one is the first call account. Okay, first call account is also open during the issue of the shares. So we saw that on the 18th of November the first call money had been received. So let's write it here and then we have to transfer it to the ordinary share capital, which is a double entry for this, and close this. Okay. So on 18th November, they received how much? They received they received from into the bank for the first call. Okay, from the bank. Okay, the amount they received was 0.3 times 0. Okay, 0.3 times 0.3 times 12 million. So that is equal to 3,600. So 3,600 was received. Okay. Now this is the amount, that's all they got, and this is transferred to the ordinary share capital on 18th of November. So the total is 3,600. Both of this is open and you will close it on the day of entry. Okay, but you have to show it as an account. Okay, for the double entry, because it's going to get transferred to the ordinary share capital account. Then for the second call, we saw that the second call happened on 31st Jan. Okay, 31st Jan. On 31st Jan, the value was equal to, and what is the money they had received, that money in the bank. Okay, and the entire money is transferred to the share capital account. So the amount they had received is 0.25 times 12 million. So that is equal to 3,000. Okay, so for the second call the amount transferred, okay, was 3,000 they had received, and this is transferred to the ordinary share capital account. Okay, so on 31st Jan it was transferred. So here you will write it as ordinary share capital on 31st Jan. So this is transferred and it is closed. Okay. of March. So the amount they received in the bank was equal to, so bank is equal to 0.15 times 12 million. So that value is equal to 1,800. So 1,800, and this is transferred to the ordinary share capital. We had already prepared here. So the third and the final call was transferred to the ordinary share capital. On 15th of March. So the value that was transferred is 1,800. Okay, then you have the next question is the bank account. Anything that comes inside the bank is going to happen here, and this is going to reflect outside. So let's prepare here, let's write it here. On 3rd May, okay, they had got totally 13.56, okay, million shares, but the value is 13,56,000 worth of money they had got in from and this is going to get reflected in the application and allotment account. Okay, application and allotment account. Okay. So there we had said it is going to be transferred to the bank, right? So it is going to be transferred to the bank. The amount is 1356. 31st August, okay, 1356. Out of this, sum was returned. So the returned amount on the 3rd May, it has to get reflected here. So on 3rd May, so this was returned back in the application and allotment. So the value is 156. Okay, we can go to the application and allotment account and see what we had transferred it to the bank. So we had transferred this and this amount. Okay, 3rd May we had transferred this, and on 24th of July this was given back. So the 24th of July also you can write, okay, 156, and this one to the bank. So that was happened on 31st August, 4,800. So that also we have to reflect here. This 31st August, from the application and allotment account, the transfer happened was 4,800. 4,800. Then 4,800. Then you are transferring the first call account, second call account, and the third and the final call account, all related to the bank. We have to write here. So the double entry we have to do. So for the 18th of November, okay, on 18th November, the first call had happened. So it's going to come as here, first call account, first call account. The value is going to be 3,600. So 3,600, and next one is 31st Jan, second call account had happened. So 31st Jan, second call. The value is going to be equal to 3,000, and the third and the final call. Okay, third and final call on 15th March. So the value is going to be equal to 1,800. Okay, they want the extract of the bank account. Okay, only the issue. So you are not going to maintain any balances